Good afternoon, everyone, and happy Friday. It's Alyssa Corum and Ed Carson here with a look at the stock market today. And as always on Fridays, we go a little bit more in depth with the market technicals, looking at that day-to-day action and looking at our expectations for the week ahead. We're also going to be taking a look at three stocks: NEO, Zoom, and Exact Sciences. So Ed, let's kick things off with a daily chart of the NASDAQ, looking at that candlestick analysis on Thinkorswim. We had a pretty decent end to what was a very wild week.
Yeah, I mean, the major indexes don't really tell the whole tale because there's a lot of rotation going on.
Yeah.
All the major indexes hit record highs on Monday. Now, for the NASDAQ, it was pretty short-lived because all the stay-at-home stocks fell on the coronavirus vaccine news. If we have a coronavirus vaccine, then you don't need to stay at home. It sort of comes as easy as that. But the fact we also have record coronavirus cases. So is everybody going to get into an airplane? And everybody going to go, to the, travel and go to the restaurants? I mean, so it's hard to know about if the real economy stocks should be rebounding either. But so the NASDAQ struggled a little bit. Definitely some of the stay-at-home stocks suffered more, but came back somewhat here. The S&P and Dow had much stronger weeks, definitely closing near their weekly highs. So a lot of turnover. It's sort of like, if, in the stock market, you can tell if the market's going up or down. It's sort of easy to understand, but it's sort of like, if you know your team's winning or losing, that's one thing. But if you don't know who your quarterback's going to be week to week, it's really hard to figure out how to game plan for that. I mean, it's like, well, what should I be going for? And so that's an issue.
That's right. As you mentioned, a lot of rotation underneath the surface, which made this week very tricky. On Friday, we did have the NASDAQ finishing up 1%, the S&P 500 and Dow up about 1.4% apiece. So, we came down on Tuesday, touching the bottom of that one standard deviation regression line. But this action is still more or less contained within those channel lines.
Absolutely. And it bounced off the 21-day line. So the indexes are, even the NASDAQ looks relatively healthy. The other indexes look pretty darn strong. Just to put in perspective on the weekly chart, it closed pretty high up here. The candlestick shows that we closed relatively high in the range, even though we had that big reversal on Monday and pulled back on Tuesday. So, as you say, fairly well contained in that regard.
Yeah, November has been quite a wild month so far. A lot of twists and turns, definitely keeping us on our toes. And so in terms of levels to watch, we definitely want to continue to stay above, that follow-through day that we saw on the S&P 500 and Dow that day. Kind of midweek last week, right after the election, and staying in that channel lines. And speaking of the S&P 500, there we go, which has definitely fared better over the last couple of weeks when you compare that to the NASDAQ.
Yeah, because the NASDAQ has all those techs, and the S&P has a lot of them too, but they also have, Boeing and Caterpillar, a lot of these travel stocks, construction, energy. And so that propelled those stocks, during the week. So that was positive action. Yeah, this was the Wednesday. This was the follow through day on the S&P. The NASDAQ followed through the next day. So major indexes still showing a lot of interesting action, a lot of wild action underneath.
That's right. So let's take a look at some of that wild action underneath. Kicking things off with NEO, which has just been such a high flyer as of late, but it reversed lower today, closing down over 7% in heavy turnover after being up big in the morning. And this is a stock that we've been saying over the last couple of weeks has been looking like it was getting overheated, and kind of warning our audience about that. And today, you could have maybe locked in some of those profits, but where it closed, what do you make of that in relation to where it's moved over the course of the week?
Yeah, I mean, just going to move to a weekly chart as well. Like, it had big, huge week this week. It still had a decent gain for the week. It rallied off the lows of the day. Citron Research, which had been actually fairly bullish on the company for a couple of years, just said, this, I gave it a sell rating and a $25 target. This one, Chris Gessel, our chief content officer, was saying on IBD Live when it was near the top, hey, you might want to take some profits here. especially because they have earnings in just, I believe, on
Yeah.
Tuesday. So you don't know what's going to happen. Given that it's run up so much, we had earnings from XPeng Motors and we had earnings from Li Auto. Those stocks had surged during the week. They both came back down a little bit, somewhat on Friday as well. You can see how far it is from the 50-day moving average. I mean, just to give you an idea, we often talk about stocks finding support at the 50-day line. Well, this would have to fall an awful lot. It's 65% above the 50-day line, and it could keep running higher. Don't get me wrong, but you just have to be thinking about what's the likely scenario going forward.
Exactly, because based on our historical research and even recent history has shown us examples of stocks that move up big like this. You can't go up forever, so you really just need to watch it and make sure that if you were someone who had a nice position in this stock and captured a lot of those gains, you want to be protecting those profits at this point.
Yeah. I mean, as you say, like lock in partial profits if you want to let it ride, but you probably want to take some get profits on that spot. Um,
Yeah, that's
another,
right. Yeah, let's move on to our next stock. Let's take a look at Zoom, which has been a leader all year, but had a really rough week this week. As you mentioned, a lot of those stay-at-home plays that had really benefited in the spring and over the summer and early fall, really getting hit hard this week with the positive coronavirus vaccine news. So Zoom triggering a pretty clear sell signal here this week.
yeah, down 19%. It ended up almost 15% below its 10-week line. The volume was very heavy, the heaviest in quite a while. You can see that it was fairly well contained in the 10-week line. It had big volatile moves, but more or less, it didn't really undercut for long the 10-week line, especially at the close, anywhere along the way. So this is one of those times where you say, like, even if you have a long-term gain, you probably may want to be, at least taking partial profits, if not just taking out, because it just seems like at this point, that is just a pretty strong signal. Yeah, some stocks will come back, but generally, when you have this kind of break, that's a sign that there may be an extended downtrend or at least rest period for this stock.
Right. Yep. That's what our research shows when you get that move under the 10-week line like that. So who knows, at best, a new base forms here. So we'll have to track Zoom from here. But again, a pretty definite sell signal for that stock this week. And elsewhere, let's check in on Exact Sciences, ticker EXAS. It's holding in a pretty tight range here, Ed.
It actually, this is a tight, it actually qualified as a 3 weeks tight because it was within 1.5% of the prior week's close for 2 straight weeks. So this is now technically that new high that is offering a buy point. I mean, maybe you could find an earlier entry a little lower, but that is a new buy signal. It's held up very well in, a very volatile market. You could have argued that a money losing high flying growth stock would have pulled back, but this one did not. It's really interesting. This one is in the blood cancer where it does liquid biopsies, where it's testing for cancer and maybe some other, in a way that's much more non-invasive as opposed to taking physical, matter, solid matter. And that allows for earlier detection. So it's a huge growth opportunity. It's actually the subject of our A1 cover story this week is on companies like Exact Sciences, Quidel, and some others that are not Quidel, Qiagen, I think, that are in this field.
Yeah, so make sure you check out investors.com or IBD Weekly Print to check out that feature story. And, the interesting thing here is we did see a very big move on that quarterly earnings report, a 23% gain, and the stock's been able to hold above the low from that day and its 21-day moving average. So holding the bulk of those gains, a decent amount of those as it trades in a tight range, which is exactly what you want to see after a big move like that on earnings. So we will keep an eye out for the next potential entry if and when that happens.
That's right.
All right, everyone. Thanks so much for tuning in. As we wrap things up here, looking ahead to next week, we saw a lot of movement underneath the surface as we still have a pretty headline-driven market here, Ed. So what should investors be focusing on over the weekend?
Well, I mean, I think you really got to reassess your stocks. because it could be that there's a lot of turnover. I mean, some of those stocks, if you've been writing certain things in the stay-at-home plays, Zoom, Peloton, a lot of the cloud software, they had tough weeks. They may be out of favor for a while. We'll see. I mean, I don't, these rotations sometimes go for a couple of days and then you go right back. But just to, evaluate your stocks. You should be, the watch list may need a lot of turnover as well. There was definitely some stocks, Chinese e-commerce did well if you're not Alibaba. There's other things that did well. So I just think there's a lot of reassessment going on. There's not a lot of great stocks and setups. I mean, there's certain things like Exact Sciences and a few things that are out there, but because there's been this turnover, stocks are either way extended or maybe pulled back. And so I don't know if there's a whole lot of buying opportunities. I will say
Patience.
patience. And I will say, when you think about expectations, the last 2 weeks, I've been completely wrong on what's happening the next 2 weeks. 1 week, we're selling off into the election and then before the election, and then we rally before and right through in this powerful rally. And then this week has been all over the place. So it's
Yeah.
no.
It's been a very expect the unexpected kind of market. So we'll have to see what next week brings. But I think another point to bring up is, with these rotations in the past, we have seen some that are relatively short-lived, but you can't just assume that either. You still need to be following the rules. Again, looking at those individual stocks and making your decision based on what the chart is giving you, and not just holding and hoping if you are caught in one of the ones that took a big hit this week.
And this one might be more substantial because we may go from a fundamentally different world of the coronavirus toward a post-coronavirus world. I'm not saying it's going to happen overnight and it might be haphazard, but there's the potential eventually we'll get out of the coronavirus. And so that creates, likely different winners and losers for the market.
That's right. So we hope this technical analysis helped you kind of digest what happened this week. And as a reminder, we're not in the prediction business. We've always said that, but we're in the interpretation business. We're staying flexible, and we're really keeping a close eye on those technicals to be able to help us do that. So we appreciate you tuning in, and be sure to check out IBD Live Monday morning for the latest take on current market conditions and setups that are out there, and portfolio management strategies over at investors.com/IBD Live. Thanks for watching. We'll see you right back here Monday.